today's market also indicates that very broadly that at the higher levels the market really clearly seems to be running out of steam or the breath at the moment. And I think the tailwind of the FIF support possibly is diminishing is what has really caused this kind of weakness at the moment. So markets definitely remain vulnerable without any doubt on the higher side. And as far as the banks are concerned, I think the two statements which I definitely did not miss, one was made by Raghuram Rajan and other of course by such a senior banker Mr. K.V. Kamath, that the banks will have to take a haircut. So I think he probably was referring to most of the big banks that probably will face some kind of NPA hurdles. So I think that being the scenario, I think the banks probably would remain under a cloud or under some kind of a shadow in the coming couple of months. So I think at the higher levels probably it will still see some selling. So it is really strange that if you were to take for the calendar year, HDFC Bank probably has not given any returns whatsoever despite index being at a good near record high.
Dilip, what's leading to this disinterest, if you may call it that, of FIIs?
Senthil, I think a couple of things probably have been happening. The tapering, of course, is happening. Then the second major factor is that probably there are no fresh triggers which are really round the corner. And third, of course, is the fact that the way the things are unfolding politically. So maybe nobody is in a hurry to really commit the funds at these levels. I'm not telling that the FIIs are totally out at the moment, but maybe they are not so much in a hurry. And probably the redemptions, if at all, have only slowed down a little on the domestic mutual front. So all in all, I think that is really causing a lot of lack of interest in the markets at the moment. But not to forget that the select mid-caps are really moving up, a few on the fundamentals and most of them otherwise on the manufactured rumors.
Mr. Tulsian, are you worried about stocks like MTNL running up? We've seen in the past how sometimes that's been the peaking for the market. MTNL is up for last two or 3 days.
Anuj, I don't think that we really worry for these kind of laggards, because now there is news that, okay, the spectrum surrender, that we have been hearing for maybe last about 6 months or so. Actually, two payments, which they've really chalked out for themselves. One is the surrender of spectrum and second is the real estate monetizations. Because obviously, if the company has losses of 4,000 crore every year, largely going into the employee cost, I don't think that you have future for that company. These are all the, punt for the traders and the small, because people, they, try to indulge into the stock. I don't see it really going beyond 1920, because even if that money will come, that is not going to improve the financial health of the company, because if you receive the money in tranches, 4,000 crores for 1 year, you have taken care of the losses financing, maybe from the spectrum. What will happen for FY14? Again, you will look for real estate monetization. So do you have light at the end of the tunnel? I don't think so, because the kind of competition which, so one should really remain away from these stocks, even as a, maybe for the traders, I can't say that, but at least for the investors, if you have in the portfolio, I think these all should be used as an exit opportunity.
All right, gentlemen, stay right there. We'll be back in just a couple of minutes. Quick commercial break, right back. 5 minutes to go before the end of trade.
Outperformance of Infosys, but heading into earnings season, how would you approach these stocks?
Well, I think it's a very difficult call to make on a run-up to the results which are going to be announced. But I think I would still bet behind both the stocks. I think Infosys, in spite and despite the run-up or maybe whatever small correction that we are seeing, I think this stock still has the potential to go up by around 15%. I think the company under the new management of Narayan Murthy possibly is able to deliver or manage the expectations exceedingly well, and probably that's what they've been doing, and probably some of the right things which they're doing at the moment, and it's making a good noise as far as the stock market is concerned and the stock prices are concerned. So I would still think that Infosys will still deliver at least 18 to 20% bottom line growth and maybe around 15% bottom line growth in the dollar terms for the full year. So I think this is a stock which probably will still remain a good bet. And I think TCS, without any doubt, still remains on the top of the list, despite the fact that it is still considerably ahead of Infosys in terms of the market cap. but the visibility and the stability of the top management is what is really most important, which is really standing out in TCS.
Another minute to go. You want to just take us through what else is dragging the market down?
Indeed, Senthil. The Nifty would defend 6150 yet again. That would be remarkable given the fact that at one point it looked like it would break down. But let's take you through the losers first. Tata Steel, from being the strongest stock last year, it's all of a sudden become one of the weakest ones. 393 on that stock, 4% lower as we close. But really the big pressure on the market came from Infosys in late trade, 1.7% lower. And of course some banking names. Banking was very mixed today. You had Bank of Baroda, which was down 3.5%, and Axis, which closed below its traded below its 200-day moving average. That was also down about 1.5%. As a sector, the one which really put quite a bit of pressure on market today was tech. Apart from Infosys, you had Wipro and TCS as well. Both of them were down about 1.5%. Some other heavyweights, then Reliance, that's a perennial disappointment for market, and that would close below the 200-day moving average today. 2% lower on Reliance. ONGC also down about 2%, so that's also not looked good in trade. And Hindustan Unilever was the other stock that dragged, was down about 1%. Just a few stocks actually which managed to help the Nifty close above 6150. Stocks like L&T and ICICI. But otherwise, it would have been
and
really
ITC to some extent, and Maruti contributing a little bit as well, right?
Yes, Maruti did a bit, but really the big gains would have come from ICICI Bank. Also, there's a bit of defensive nature to this market today. You had Sun Pharma, which did fell up about 1% or so, and Dr. Reddy's was also in the green, so that there were also a couple of other stocks that stood out. Also, after a long time, we had mid-cap underperformance. For the first time this year, you actually had mid-cap underperformance with mid-cap index ending in the red, down about 1%, and stocks like GMR Infra and Future Retail down about 3% or so.
Mr. Ulsan, so that's the market holding on to 6150 at 6160. We'll talk about that later, but IT had a bad day today, but over the last 5 days, since the beginning of the year, IT and pharma have stood out. Would you get into IT ahead of those big numbers coming out?
See, Senthil, probably I don't think that market is really comfortable with the Infi number, because as such the Q3 are always dull for the IT companies, and maybe the guidance will all decide, because nobody is really interested to know the Q3 numbers. In fact, it is all the guidance or maybe the language which will be used by the promoters of all the companies. So yes, Infosys will definitely be closely watched, and accordingly if the Infosys comes out with the satisfactory Q4 guidance also, or they give the indications of all those things, then only the IT will again come back into the focus. But I'm not keeping the negative stance on IT for this series, because definitely post Infosys number, I think the renewed interest will come back into the IT sector.
Dilip, you clearly said you're positive on IT, you're positive on TCS and Infosys. How about pharma?
Pharma?
Yeah.
I think pharma also continues to be on the absolutely the better side of the performance. I think whether you take Lupin, whether you take Sun Pharma, whether you take Dr. Reddy's, I think all of them are expected to do pretty well. I think if I'm correct, Lupin probably can notch up almost about 25-30% YOY growth in the current year, and possibly that kind of a growth is possible over next couple of years too. And I think in pharma, probably Ranbaxy is another stock which has really started emerging out of its bad past. So I think that's another stock which probably has a good potential. So all in all, pharma also holds a good potential. Even in the mid cap, some of them have really started turning the corner, and they're doing pretty well, whether it's Aurobindo or Indoco or Ipca, any of them, you name it.
Dilip, let me follow that up with a question on the auto sector. Maruti closed the day today as the best performing stock. The sales data has been fairly dismal over the last several months. Do you feel that there is a turning point around the corner, or would you continue to be negative on these stocks?
So as far as Maruti is concerned, I think we all know that it is going up for reasons other than the performance. I think if you take purely on the fundamental performance, I think it is clearly ahead of its fundamentals at the moment. And even assuming that 2014-15, we are still going to see a turnaround, I think it is still expensive even by that standard, whether you take it on whether the ROEs of the company, or even if you take EV to EBITDA, I think they're all looking expensive. It's of course the buzz that Suzuki is going to buy out the stake is what is really driving the prices up. But overall, I think within the auto pack, I think it is still going to be something like M&M and maybe the two-wheeler pack, and more so something like a Hero Motors, which probably is forging ahead and probably still consolidating and doing pretty well. So I think that is what broadly would be my take on the auto sector.
Mr. Tulsian, what about Tata Steel? Think we've had fair enough correction, or would you wait for a bit more?
See, Anuj, I have been keeping my negative stance on this, except for JSW Steel, if you really see the technical factors. Even if you take the specific call on Tata Steel, I am unable to understand even the Q1 and Q2 results, which have been posted by the company, and market has taken that very positively. Because if you knock off the deferred tax, the deferred tax credit has made the results to really show good numbers, good bottom line.
Even on a consolidated basis?
Even on a consolidated basis. I'm talking on a consolidated basis. In fact, sometimes I find that that's a big market, folly, which has been committed. 500 crore, out of 1200 crore net profit reported, you have to knock this off deferred tax credit of 500 crore in each quarter. So anyway, now coming, if you really take the situation, Indian margin, EBITDA margin of the Tata Steel has been falling, or maybe the chorus is rising, say, by about $30 per ton, while Indian margin has been falling by about $100 per ton, or maybe, more than that, and you have the equal volume. So I don't think that there is any kind of margin increase for all these ferrous makers, whether you talk of Jindal Steel and Power, JSW Steel, Tata Steel, Steel Authority, and the same situation. When you talk to these people, the situation, I explained that earlier also in Taloja, the cutters, HR coil cutters, they are all operating at 15% capacity. So that gives the indications that what kind of performance we are going to see from these companies. So I have never been comfortable, and I have been giving that just when stock moved to a level, though I have been keeping my negative stance from 330, let me say that in Tata Steel. But when it moved to a level of 420, 425, I found that maybe on the technicals also, these things are not looking very attractive. So maybe a level of 370, 375, where initially it should take some breather. Yeah.
We're down about 500 points in the first 5 trading sessions of the year, Mr. Tulsian. Does that change your view of what the January series will be like at all?
No, Menka, actually...
Because you were positive, if
no,
I'm
keeping my positive stance. In fact, that's what I say, that the unfortunate part that till December, we have seen oil and gas, steel, metal, bank, these stocks are driving. Now, sometimes the process gets little elongated for these people, to exit from this weak sector and to move to the healthy one. We have seen that happening in IT and pharma. FMCG has not really participated. But as I said, that maybe post results, because since series is of 5 weeks, I am keeping my positive stance on the series. I am not, because generally whenever you see the stock getting, start participating in this, unless and until we see the distribution, takes happens completely in this 4 or 5 sector. You can add even the capital goods also, or maybe the real estate. These were really the driver for the market for whole of December, which are not very healthy sign. So yes, the IT, pharma have started participating. FMCG has been, lagging behind, but they've stopped correction. We see Asian Paints, moving up. We see Dabur going up. So you see the rotational stock rotation.
So you still hold positive?
I'm holding positive view on the January series, and I maintain my level of 6,500, which I in fact gave, or maybe 6,550. So let's see the results, because the series is up to 30th January, and we may not be able to see the results coming in of many banking sectors and all that, which will really pull down the market by then, because the result date is up to 15 February. So I'm keeping my positive hopes on the January series.
Dilip, let's you used an interesting phrase some time back earlier in the conversation. You said shares are up on manufactured rumors. So take us through some of these shares that have gone up. You've had Sri Renuka up, you've had Suzlon up, you've had FT up, you've got Mangalore Chemicals, the fertilizers up. Lots of them on news. How would you look at them?
Well, I think Senthil, it would not be right to name some of these stocks, but very frankly, you have seen that very... but still, the broader theme is that you really find that quite a few of these stocks being bought the previous day, and that the same evening, most of the SMSs are sent to most of the people, so that next morning these stocks really, if at all there is some tailwind in the market, they open with a gap, and then probably some kind of profit booking happens. It's not to say that all the stocks are happening that way. A few of the stocks probably are genuinely very badly beaten, and probably this would be the opportunity to really look at some of them. So I think maybe I can talk about them, but I think the major fact still is that we hear all kind of rumors about some company buying a part of the business, some food business by some multinational, and those companies being recommended. I think all those things probably would typically go do the round, especially when the mid caps have to really start moving. So I don't think I'm really surprised, but at the same time, I think I need, I feel that we need to be a little more cautious.
Okay, but you said you will talk about some shares that you think are beaten down and hold value. You said you will talk about some shares that are beaten down and hold value.
Yeah, for example, I think something like a Phenolics cable looks pretty interesting even from the current levels. I think Dishman Pharma has already moved up, but Dishman Pharma would be another stock which probably would look exciting slightly in the medium to longer term. I think Calcutta Electric CESCA is another stock which looks pretty good. I think Great Eastern Shipping, though it has moved up, that also is another stock which probably looks reasonably okay. Cox and Kings would be another stock. So these are about maybe 4-5 names which possibly I think they look good from a medium to longer term, of course not in the short term. So I think these are some of the names which still has a good and reasonable potential to show its performance.
Dilip, let me ask you a small, more medium-term question. Now, Mr. Tulsian here in studio is saying he continues to be fairly positive about how the January series will end. Then let's talk a little bit, into the quarter. You've got earnings that are going to come up, but the year seems to have started on a fairly dismal note, right? A lot of the ARP economics, as people are calling it, has spooked some companies in sectors that are affected, for instance, power. We had the Delhi High Court decision yesterday regarding a CAG audit of all those companies that have some sort of revenue share agreement with government. You've got the fiscal deficit sword hanging over everybody's head, and now maybe a rush by the government to try and offload stakes or get special dividends or do that PSU ETF, all of which will put some paper and pressure on the markets in some fashion. Do you think that this quarter is going to be a dull, slightly pessimistic quarter before we hit the second quarter, which might be a little bit more optimistic given its proximity to elections?
So Menka, I think for the investors' sake, I would feel that Tulsian should be right. But I myself, I don't subscribe to a very positive outlook for this quarter as such. I think, really speaking, there are too many ifs at the moment, too many hurdles at the moment. And I think the major tailwind is, of course, the FI money. The moment it starts getting out, I think the mood swings to pessimism. And the moment it starts coming in, everything looks a lot more positive at the moment. But having said that, I think you yourself also have summed up quite a few of the hurdles which are really on the way. But my major concern still are the valuations. I think valuations are significantly ahead of the fundamentals at the moment. And I think unless and until there is a very sharp turnaround in the third or the fourth quarter, it will be very difficult to justify these kind of valuations. Because generally what we find is people generally are very charitable when it comes to market and being optimistic. But when it comes to stock specific, it's the same old ITs, the FMCGs, the pharmas, and the IT companies which people talk about. And still there is not a broader breadth which people are talking about in the markets.
By the way, first 5 days in the red hasn't happened since, I think, late 80s or 90s.
Okay.
I think, didn't Nigel put something out? I think it's the
worst
Nifty
since 2011.
is not lost the first 5 days in any calendar year since 2004.